straight to the top story of the day. In a surprise move, the Reserve Bank of India today has not just left the policy rate unchanged, but it's also signalled that it's almost done with cutting rates. The Reserve Bank reiterating its goal to reach 4% inflation and has said that rising crude prices and forex volatility can push inflation higher. It's also less bearish on growth than the street. It expects this year's growth at 6.9% and next year's at 7.4%. Latha and Ritu bring you the highlights of the Monetary Policy Committee's policy.
Hello everyone.
RBI is at the end of its rate-cutting cycle. The Monetary Policy Committee not only kept the repo rate unchanged at 6.25%, it also changed its stance from accommodative to neutral. The governor stated that the MPC's policy goal was 4% inflation. But non-food, non-fuel inflation is refusing to dip below 4.8 to 4.9%. Also, rising crude prices and currency volatility may push up prices this year, hence the need to change its stance.
The committee was fully cognizant of the lags through which monetary policy typically operates. It was also sensitive to the need for a calibrated approach to the target, thereby minimizing the collateral costs of achieving it. Therefore, it decided to shift the stance of monetary policy from accommodative to neutral to give us sufficient flexibility to move in either direction.
The RBI is not too bearish on growth. It has revised its gross value added forecast for the current year to 6.9% from 7.1% earlier, but estimates that growth will bounce back sharply in the next fiscal to 7.4%, helped by recovery in consumption, restoration of economic activity in cash-intensive sectors, and rate cuts by banks, and the government's budgeted higher capital expenditure. On inflation, the Reserve Bank sees consumer price index at 4 to 4.5% in the first half of FY18, though CPI is projected to rise to 4.5 to 5% by the second half of next year.
Continuing uncertainty on the upside over oil prices that might be enhanced geopolitical reasons, Iran, etc. Base metal prices have gone up internationally. The food index, by the way, global food index has gone up. So there's more than one channel of global spillovers.
We set out our range 1.25 to 1.75 and stays there. And if you make your calculations taking any risk-free rate and the forward inflation rate, you will come into that range.
Although RBI itself stayed put on rates, Urjit Patel indicated that the onus is now on banks to bring lending rates down. Bad loan resolution, recapitalization and small savings rate cuts would help banks further cut rates.
There is still scope for the lending rates to come down because our policy rate came down by 175 basis points and the weighted average lending rate has come down at most by about 85-90 basis points. So I think there is scope for some more transmission. For some borrowers, the healthy borrowers, sound borrowers for housing finance, etc., they've already benefited.
Full marks for the Monetary Policy Committee and the Reserve Bank of India for chasing their given goal of 4% inflation in such a steadfast manner. They have not buckled to any pressure, and the interstate scenario from here on is definitely going to be stable. Also, an important message to the government that unless they get their act right on both NPLs and on recapitalizing banks, as well ensure market discipline in interest rates on small savings, they should not expect the cost of money to go down.
In Mumbai, with Ritu Singh, Latha Venkatesh.
Well,